you have to understand that trading is a zero sum game. There's going to be winners in the marketplace and there's going to be losers in the marketplace. Today, we were losers in the marketplace. Um, Trading, the market is not against you. The market is not there to fight you, right? You're just looking to find a little bit of alpha or a little bit of edge, and then trade your edge every single day. So we're going to talk about the five step approach to finding your edge, right? I think this is probably the most important topic. It's just a bunch of words, right? There's no charts here. It's just a 5-step approach. I'm going to show you what I did to find profitability. And we'll talk about that for about 5 minutes. Then we're going to go into journaling, how you actually journal your trades, because it's a very big component of trading. If you're not journaling your trades, I just don't think you'll be profitable. You have to journal your trades. We're also going to talk about managing your size, your account size, your position size, what you do to manage a small account and how you grow a small account. Because people often say, like, I have a 5K account or a 4K account or a 3K account. How do I flip that to a 10K account? Like, what can I do to get this to 10K? Well, it's not a quick and easy thing. It's going to be a slow grind up, right? It's going to be a slow grind up. We're going to talk about that slow grind up, but it is doable. I mean, for me, I turned 5K to 10K in about, I think it was about 3 months for me, right? About 3 months to get there. And I think that's a fair sort of growth, right? Seeing doubling your account in 2 to 3 months, that's a very positive thing to do. So I want to talk about what I do to get there. The last thing we're going to talk about are trade plans, how you create a high win rate system. How you turn your trades into a trade plan to create a high win rate system. So we're going to talk about these 4 things today. Today's session is not going to be a very fun one. You're going to sit here, and after about 30 minutes, you're probably going to be getting pretty bored, but it is a very important lesson. I've done very exciting lessons before. We've done price action analysis, which is very exciting. The last one we did was very exciting too. This one's going to be more of a mentality thing. It's going to be more of me talking to you guys rather than me showing you a million charts, a million different setups. So understand that we're not going to be here to show you a bunch of charts today. It's going to be more of a mentality thing. So I hope this is helpful, but without further ado, let's get into the 5-step approach. So this is probably the most important thing I want to talk about with you guys today. It's the 5-step approach. Now, there are 5 steps to becoming a profitable trader. And this is the 5 steps I personally took when I was learning how to trade. Just for transparency, I had my first multiple 6-figure year last year. This year, I'm going to have, again, a multiple 6-figure year. I'm not on 7 figures yet. Maybe next year I'll be 7 figures, but I'm on multiple 6 figures. And how I got to that multiple 6-figure range was because the first thing I did was I studied other profitable traders. I didn't follow some random Furu on Instagram and see what he was doing, right? I followed people who were real traders who were making money in the market, and I learned to see what they were doing. So some traders, just so you guys are aware, right? The people I looked at was Aristotle, right? Unraveler, Mike, Felony, right? Umar Ashraf, people like that, people who are profitable traders who have been in the marketplace for a long time, who have some sort of statistical edge. And I kind of learned what they were doing in the market first, right? So you see that there are many different traders. Some people will come in to trade opening bell bounce and rejects. Some people trade break and retests. Some people trade the orb strategy. Some people just take VWAP projections or VWAP bounces, right? There's so many different strategies out there, right? There's the ICT system. There's so many different systems that are out there. And there are very few traders who are actually profitable trading them. So the first thing you want to do is find a profitable trader. So if I were to speak to myself right now, find a profitable trader, I would say, well, follow one of us, right? Look at what we're doing in the market. Yeah, we're going to have losing days, right? I had a losing day today. Mike had a losing day today. And Raver had a losing day today. I think Aristotle and Felony were the only 2 ones that actually were green today. And study what they're doing, right? Look at what their system is. What are they trading, right? What did Brett trade today? What did Mike trade today? What did Felony trade today? What did Aristotle trade today? Look at the setups they're taking and try to create a sort of maybe like a book of the strategies that you see them trading. Then take these strategies and look at the charts. spend time seeing how they sort of work out and find a system that resonates best with you. So in my opinion, from my experience, this is solely my experience, I found that there are two strategies that work the best for me. The best strategies for me are opening bell, bounces and rejects, and break and retests. I found that for myself, off of my personal data, that about 85 to 90% of the time I win on break and retests, and about 70 to 75% of the time I win on bounces and rejects. Those are the two systems I trade. I have found through personal experience that open range breakouts, head and shoulders patterns, you think of other double bottoms, bear H patterns, chart patterns don't work for me. This is something I found. And the reason why I found this was because I did step 3. So step 1 was finding other powerful traders. What are they doing, right? What is Mike doing? What is Robert doing? What is Brett doing? What is Felony doing, et cetera? Then find a system that sits well with you. And for me, what sat well with me initially was open range breakouts, the orb strategy, break and retest, bounce and reject, and pattern trades. I learned that pattern trades were just not a system that I could personally use because I would lose on them in the long run. I traded about 20 to 30 of them, and I realized that out of those 20 to 30, I won about 15, right? Which made it so it was about a 50% win rate. Then I jumped over to the other strategies I was trading and realized, okay, well, these other strategies are giving me an edge, right? Break and retest specifically was giving me the largest edge out of any system. So that's the sort of the one I want to have the most size on. And the idea is that whatever you're doing, whatever stage you're in, you need to build data, right? Build data. And we're going to talk about this in a second. We're going to talk about the idea of building data, what it means. Building data just means journaling your trades, right? Journaling your trades. It doesn't matter who you are. I don't care if you are a god at trading. You need to be journaling your trades. And the reason why, even if it's literally just coming in and getting pen and paper and writing down on a book the trades you took that day, the reason why you do this is because you're going to find out that certain things don't work for you. I see it in the chat all the time. After I lost on SPY today to the 442 bounce on SPY, people came out and I said, listen, Brett, it was a great trade, but I hate taking bounces and rejects. And that's going to be something that you need to sort out yourself, is going to be what sort of system, right, doesn't resonate with you and what system does resonate with you. You never want to be taking trades, well, especially on live or signals, right? If it doesn't resonate with you, if it's not your system, do not trade it. Now, if it is your system, that gives you extra confidence. Specifically, let's just say, for example, that you find break and retests are your best system, right? And you say, okay, well, Aristotle, Brett, Mike, we're all on Voice one day and we're trading a break and retest on AMD. Well, that's going to be a trade you probably want to take with us, right? Especially if you like the trade as well. But if we're trading an opening bell bounce or an opening bell reject, don't feel the need or the inclination to take that trade. This is a very important idea. I know it sounds stupid, but you never want to be trading things that are not within your system or not within your set of strategies. Have a set of strategies. Literally put it on a post-it note next to your screen. These are the systems I trade. I don't trade VWAP rejections, or I don't trade 8 EMA bounces. I only trade bounces and rejects, right? Or only trade break and retests. Have it written down somewhere and understand those are the ones you're going to be focusing on. If you start going willy-nilly, taking trades that are outside of the realm of your system, then how are you going to be a profitable trader in the long run? How are you going to get to 6 or 7 or 8 plus figures, right? How do you expect to do that without by going outside of your normal comfortability, right? That's the first thing. Now, number 4 is to refine your system. So for me, as I said, the two things that work best for me are bounces and rejects and break and retests. So then I added a couple more things to that. Well, I said, okay, well, fine. Well, I know bounces and rejects work well for me, but what doesn't work well with bounces and rejects is if I go against the trend too much. There's a certain point where it goes, it's just, you're trying to catch a falling knife. And so what I use, just as a complete side note, is I use something called the 15-minute 200 MA, right? So if I were to go to a chart for a second, and I'll show you SPY today. Well, there were 2 levels on SPY I was watching. I was watching the 442 for a potential bounce, and I was also watching the 440 level. So the reason why I tried these demand bounces today was because at both of these points, right? At almost both of these points, we were above the 15-minute 200 MA. What I generally do is with every bounce and reject I take, I'm going to trade with this moving average so that I'm not going to be too against the overall trend. You can see here, the 15-minute 200 MA is a very, very good indicator in terms of finding trend. So at the end of the day, even though I might be a little bit against the trend, right, intraday, on a larger time frame, on a 15-minute time frame, an hourly time frame, I'm with the trend, right? So that's what I do. You see, like pretty much from July 7th to almost mid or end of July, I was trading almost solely bounces on SPY. And the reason why was because we were above that 15-minute 200 MA. Now, when we were below it, right, we were trending below it, I shifted more towards rejects. I was trading with the overall trend because the moving average was well above where we were trading. So the idea is that no matter what system you take, right? So if you choose bounces or rejects or break and retest or opening bell breakouts or mean reversions or whatever system you're trading, you need to create things that's going to refine your system, right? You may find that you like a certain system, but there are little tweaks, little things you can do to increase your win rate. So for me, I found that if I was taking break and retests, I would have originally I would have like a 65% win rate. Now when I take break and retests, I have about an 85 to 90% win rate. One thing that I did to my break and retest that gave me a higher win rate is because instead of focusing on random names, I will focus on relatively strong or relatively weak names. So what that means for me is if let's just say SPY is up, let's just say SPY is up plus 1%, right? Plus 1% on the day. And NVIDIA is up, right? NVDA is up 7% on the day. It's 7% stronger. Well, then NVIDIA is going to be a higher conviction play for me, right? For upside, right? For break and retest the upside. So I found that one thing I could do better with my break and retest is by focusing on tickers that are relatively strong or relatively weak. So Google is a great example, right? Google was a trade that we had taken that I actually missed this trade. I should have taken it yesterday, but I was having Wi-Fi issues. But Google over 132, right? This is a relatively strong name. Look at this chart for a second, right? Compare this chart for a second on Google, right? This 15-minute chart on Google. Now I'm going to do the same comparison, but this time I'm going to use SPY's chart. And when I show you SPY's 15-minute chart, you say, oh, well, that's interesting, right? Because you can see here that on the 15-minute time frame, SPY, right, which is considerably weaker, Google is pretty strong. It's actually been relatively stagnant since Friday of the 28th. It's pretty much just been flat. And if you go to SPY, Friday the 28th, right, Friday the 28th, where the heck is that? All over here, right? SPY's has gone down multiple percentage points, right? So the idea is that one thing I added to my system was trading relatively strong names on calls and relatively weak names on puts. That was one thing that I did to increase my sort of edge. Now, this is just kind of like little tips or little tidbits that I did for myself. You guys are going to have to do your own research to find what works best for you, right? So for me, it was trying to use the 15-minute 200 MA, which is one thing for bounces and rejects. And then for break and retests, focusing on relatively strong or relatively weak names. Those are two little tidbits I did to refine and increase my win rate, right? All in all, that brought both those things brought my win rate up to about, I would say probably like 80% or 75%, right? The average between the two. And then after about 60 to 90 days, I then sized up. So you need a minimum, right? You need at minimum at least 60 trades to actually have a well thought out system and a well planned out system that is statistically sound. So doesn't matter if you go through 1, 2, 3, 4, 5, and you do the all in a week, right? You can't size up for at least 60 days. And I really mean that. I don't care what your account size is, if it's 2K, 10K, or 100K, you can't be sizing up until at least your second month of trading your system. And let me tell you something too, very importantly. If you are trying to, I know many of you guys are already profitable yourselves, right? But if you are not profitable yet, going through these 1 to 4 steps, I don't know why I'm using my book right now, going through step 1 to 5 can take you, well, 1 to 4 can take you probably about a week or two. Then once you get to step 5, things can really take a turn very quickly in your account, right? And what I mean by that, when I first blew my account, so that was about a month in. From month one to month eight, I was a struggling trader. I pretty much just broke even every single day. Now, after that eighth month, it sort of happened over the span of month eight to month 12, where I started following the system, right? I studied other profitable traders trading, right? I then found a system that worked for me. I then built data on the system by journaling every single day. Then I refined the system by adding little features and little tidbits to make it a higher win rate system. Then by month 11/12, I had already doubled and tripled my account. Things can take a turn very quickly, but you have to be strategic with it, right? You have to understand that you can't size up your system until you have about 60 days worth of data. Okay. I know right now I'm going off on a complete sort of side term. Let me go to the next slide here and talk about this next thing. So journaling your trades. So this is the idea. We talk about building data. What the hell does building data mean? Well, there's several things you could use. You can use a software like TradeZella, but pen and paper are totally fine. So the first thing I want to show you is it's going to be pen and paper. So where is my spreadsheet? So this is my spreadsheet, pen and paper. You could literally use an Excel sheet, or you could write on a journal. The idea is that with every trade you take, doesn't matter if it's a big trade or a small trade, you want to come in at least while you're a developing trader. You don't have to go crazy with it if you are, already profitable. But if you're a developing trader, what you want to do is after every single trade you take, you're going to come in and you're going to journal the trade you had taken. This on my screen right now, just you guys can see my screen, right? Can you guys see my my Excel spreadsheet? Can you guys see it? Okay, cool. Awesome. This spreadsheet is free. You don't have to pay a dime for it. It's literally free. It's in the chat. You can come in, you can make your own Excel spreadsheet. You can say, screw the Honey Drip logo. I don't want to see that. I don't want to see any of this. I just want this, right? You can do whatever you want to this. It's yours. And what you can do is after every trade, you can come in and say, okay, well, I took AMD today, and then I took Tesla today. This was the expiration date. And I took the 500 strike on AMD, right? You took a call. And then you can journal how it worked out. And then what you're going to do is you're going to come in and you're going to put your notes in here. And your notes is going to be the most important part about the trade. The notes you're going to show what system you traded, right? And what went right with it and what went wrong with it. So if I were to come into a day like today, I would come in and say, well, okay, I took 3 trades today. I took NVIDIA. I won about 25% on it. Then I took SPY and lost about 20%, and then SPY and lost 17%. So 3 trades in total. Then what I'm going to do is I'm going to come in and I'm going to say the note side. Okay, well, the NVIDIA trade was executed well, and I got out of the trade perfectly. So but everything was beautiful that trade. Then I'm going to also indicate that it was a bounce, right? It was an opening bell bounce after an earnings play. Then I'm going to go to the SPY trade and say, okay, well, I took a demand bounce at 442, and I took a demand bounce at 440. And then what went right and what went wrong with the trade? Well, I can say, well, the trade worked out wrong, right? It didn't go out as I wanted to, but ultimately it was still within my strategy. So I'm not upset about it. And the reason why you're doing this is because you're going to create data on the trades you're taking. You're going to find out, well, 75% of the time you're winning break and retests, but 30% of the time you're losing on the opening range breakout strategy. So you're going to find out that, well, you should never touch that opening range breakout strategy ever again because you are statistically losing on it. So this is why you're journaling. And again, you don't have to do it on an Excel spreadsheet. You can literally do it on pen and paper. In fact, when I was doing it myself, the first 8 months were on pen and paper. I didn't even know how to use Excel. So I used pen and paper for everything. You can do it in Excel as well. And the second thing you could use is you can use a journaling platform. Now, I would say this, I think TradeZella is kind of expensive. Stay away from it if you think it's also expensive, but it does have good data. And so for example, this is a trade that I had taken from Friday, August 18th, where it was a trade that we had signaled. It was a SPY reject off of, I think it was, 436.50 to 437, right? That was the reject level we were watching. And what I would do is I'll come into this trade and I'll look at my executions. I'll say, okay, well, I got 40 contracts at 1.32 a pop. Right? You can see here on the chart, you can see this is the option contracts. I got in puts over here, And then the option contracts went up in value and I sold some at 1.5 and then more at 1.6. Okay. So the trade went well. Then I'll go back and look at what I could have done better in this trade, the strategy I traded, and any other notes or tidbits that happened in this trade that I could have done to improve. And this is going to be incredibly important as a developing trader. Well, now what I do now for myself. So if I go back to my dashboard, you'll see that I don't put in every single trade I take anymore. The reason why is because there are some times where I trade a little bit lighter and I just don't really journal it. And that's okay for me because I've been trading for a long time. But as a trader who's been trading, if you're maybe 4 months or 6 months or a year, and you're still trying to get to that profitability stage, well, you should be journaling every trade. And the reason why you're journaling every trade is because it's going to make you do homework. That homework is going to make you feel like, you know what? I shouldn't take this next trade if it's a degen play because I'm going to have to do homework after this. I'm going to have to write about the trade I just took to see if it fit my strategy, to see what I did right with it, to see what I did wrong with it. It's a little bit of work that is involved in every trade after every trade, and that makes you feel more refined in the trades you do take. So you're not going to sit around and overtrade. You're going to focus on the high quality setups, and you're going to journal those high quality setups after each trade. Okay. So back to the slideshow. Basically, you guys already know this stuff already, right? You journal all your trades. You could use an Excel spreadsheet. It's in the chat. It's under Trading Misc. Or you can use pen and paper, or you can use a platform like TradeZella or TraderView or whatever journaling software is out there. There are many of them that you could use. Okay. Don't feel like you have to pay for it. I'm going to just say this, but pen and paper is totally fine. In fact, it could even be better debatably, right? You don't really need everything TradeZella has. Okay. All right. So what I want to do now is I want to talk about another thing that I did in my trading that helped me a lot was create a trade plan. So there are often times where I hear a lot of people will take a trade. For example, we'll go over 2 trades. We'll go over the SPY trade that we signaled from last Friday, and we'll go over NVIDIA from today. And we'll talk about what you could do better, right? In terms of how you actually execute a trade. So what we're going to do is we're going to go over to the morning watches section, and we're going to talk about my trade plan this morning. Now, it doesn't matter what I was watching. It only matters what you guys are watching. If you find that let's just say I'm watching NVIDIA 484 to 480, right? That's my bounce level on NVIDIA. But if you find that you're watching 479, well, that's you stick with that, right? That's what you're watching. Stick with your own plan. But let's just say you're also watching the 480 bounce. Well, then you can feel free to hop on Voice and you can trade it with us, right? Trade it if it falls within your system and if it matches your level. So let's go over to NVIDIA 484 to 480, right? Let's go over to the chart now, and we're going to hop over to NVIDIA's chart, and we're going to see what my actual trade plan was here. There were many people, right, that entered a little bit early in NVIDIA, and I was sitting there wondering why people were losing on NVIDIA. And the reason why is because this was potentially, because I think there are 2 bounce levels on NVIDIA you could have watched this morning. You could have either watched the 490 bounce, which was like over here, or like over here, right? The 490 bounce. You saw a little bit of a pop off that level, or you could have watched my level, which was the 484 to 480 level. And I trade a very simple system. I just look for big demand areas, right? You can see here, we had a very clear high at 484 and a very clear next high at 480. So I knew very simply my balance level was going to be 480 to 484. It's all in the chart. So I go to the 5-minute time frame and I develop my trade plan. So my trade plan, it consists of 3 very important concepts. It consists of 1, right? My entry, right? Where the heck am I entering on this trade? My entry, right? It's very horrible handwriting. It consists of 2, my stop loss, right? My stop loss, my stop. And then 3, my TP, my take profit. Those are the 3 components of a trade plan. So I knew I had these 3 things. I knew exactly where I was entering. It was that 484 to 480 level. So if NVIDIA was dumping, right? And it came down to 490, and it came down to 495, and it came down to 487, it doesn't matter if Jesus Christ himself has just entered the trade. I am waiting for 484, 485, at least 485, right? Because that is my plan, right? My plan is to stick with my own watch in the morning, right? And I'm going to wait for my exact level to hit. My exact level was this demand. So I entered calls right over here, right in this red candle. And then we pulled back to 480. And at this point, I looked over into the chat and I saw everyone was freaking out. I'm down on the video because they entered over here, right? And over here and over here. And then they were holding to 480. And then many people got stopped out. And my mindset was it doesn't matter where you entered, 40 was your stop, right? 44 was my entry, but 40 is my stop. So my trade plan is what made me feel more comfortable in this trade. Doesn't matter if you're a small, this is advice not to small accounts, but just every account, right? Doesn't matter how much I'm up and down in this position, because I was down about 20% on this trade, right? Even though the stock barely moved, I was down about 20%. I didn't even look at my P&L. I was like, okay, I'm down 23%, 20% is what it is. 480 is my stop loss. Very simply, because that's my demand. If we lose 480, then yeah, we can see lower and I'll get out. But I held knowing that 40 was my stop loss and 490 is my take profit. So I have my exact trade plan, and all I'm going to do in this case is follow my trade plan. 490 take profit, 484 entry, 480 maybe add some more, and below 480 is my stop loss. Having a trade plan is going to make you be a much more refined trader, because there are so many people who I know personally who held NVIDIA all day and maybe they won on it, right? And I'm glad they did win on it, right? Because I'm glad that they made money. I'm glad that it eventually went up towards the end of the day. But you have to, with every trade you take, have a real trade plan. Because if you don't have a trade plan, you're just going to be going off intuition and off randomness. And I found for myself that humans we're not good at being random. We have to follow a system, a strict system. And if you don't follow that strict system, you're going to get stopped out early. You're going to look at your P&L on the left-hand side and say, oh, I'm down 23% on NVIDIA, but you're right above the demand zone. So you can't cut your NVIDIA contracts until you lose that demand. Very, very important. So it doesn't matter how much up or down, it's within my trade plan. I'm going to hold that. I'm going to hold it, right? Now, if we get to my take profit, that's where I'm going to sell. Very important concept. If you're a small account, a big account, or a mega account, right? You need to have a trade plan. Second thing is create a daily routine. I personally was working a full-time job when I was trading, when I was first learning how to trade. I could not trade every single day. Many of you guys are the same way. Many of you guys have other things you're doing throughout your day. You have kids, you have a parent to take care of, you have a job, a part-time job, whatever it may be. Create a daily routine on the days you trade. So if you decide you're going to take maybe once a day to trade, or once a week to trade, or twice a week to trade, have a routine for those days that you trade. Have a strict routine. Okay, well, the first 15 minutes of your trading day, you're going to go over, maybe you join the pre-market webinar, join with me, we'll go over my plan. Or maybe you're going to spend the first 15 minutes of your day going over SPY, ES, NQ, QQQ, then jumping over to the tickers you're watching, like AMD, NVIDIA, Tesla, whatever it may be, going through your set of tickers, right? Going through each one and seeing which one has value for the day. But you need to have a daily routine. It doesn't have to be every single day. It can just be the days that you trade. So for myself, I could trade only the first hour twice a week. So I created a routine. The first 15 minutes of that hour, I would do my charting, I would do my analysis, and the other 45 minutes, I would sit there, I would wait patiently and wait for my levels to hit. Very important. I would never force trades. There are some days where there just weren't any trades for me. Nothing came to my level or nothing hit, and that's okay, right? You're gonna have certain days where it just doesn't pull back to your demand, or doesn't pull into your supply, so you can't go long or can't go short, or it doesn't break out of your resistance, so you can't take the break and retest. It's okay to not take trades some days. It's totally fine. The reason why I say that is because, let me tell you this, right? If you have a 4K account, right? If you have a 4K account, you need to trade that 4K account almost the same way as if you had a 500K account, right? It's almost the same way. And the reason why I say that is because you only want to be focusing on high probability systems and trades that fit within your system, right? You don't want to go do things that's outside of it. Okay. Have a method to research and analyze stocks. If you guys haven't seen it already, watch the last lesson we did, right? I go over what I look for, my analysis, what I look for, how to chart supply and demand, break and retest, my strategy, right? There's 3 classes that I did on that previously. So If you guys haven't seen it already, I can post it in the chat for you. Have a strategy that works in different market conditions, right? So for me, I trade bounces and rejects and break and retests. Bounces and rejects work really well when we're holding structure. Break and retest work really well when you want to just go with the overall momentum, right? So two different strategies. You can trade either one and both work incredibly well. Have an effective stop loss strategy. And then last, have a method to document your trades to backtest your strategy, your system. So we just talked about that, right? Number 6, we just talked about for the last like 10 minutes. So I'm not going to go over that again. But very important, just have a system. Okay. What I want to do now is want to go over position sizing. And this is really important because a lot of times people come in with the mindset that they want to flip their account very quickly. And it's understandable because that's what I wanted to do too. But trading is a long game. You are here for the long game. There are certain things that I do, how I manage my account, which I think will help you guys too. So I'm going to explain to you in the next 5 minutes how I manage my account. And we've kind of gone over things like this before, but I brought some math into this for us to talk about, to show you really what I mean and how you can be successful trading this. So let's just say you come in today and you have a 3K account. How many of you guys, curiosity, how many of you guys trade with under a 5K? How many of you guys trade under 5K? Okay, a lot of you. Okay. What I've found is 3K is the best amount to start off with. The reason why is because it actually gives you the ability to take trades, to actually take trades and test stuff, right? Because your whole thing is like you're trying to test shit, right? Excuse the language, but you're trying to test what works for you, right? So 3K account's the perfect amount to start with. This is also important. I don't care if you're 2 years in or a year in, and you're at 50K. Take your $50,000, take your $47,000, put it in an interest yielding account or put it in your long-term account and take $3,000 and trade with just $3,000. It doesn't matter what you have right in your bank account or your brokerage. You only want to be starting with about 3 or 5K, right? Even if you're a year into your trading, only use 3 or 5K. The reason why I say that is because you want to at least if you're still developing. Now, if you're not developing, I know many of you guys are already well-developed traders, but this only goes for developing traders. You want to start with 3 or 5K. What you're going to do is you're going to go for a 10% average size per trade. So if you were to math it out, 3K account off of a 10% average size per trade, that means you're going to go for $300 per trade. Your goal is to take 1 to 3 trades per day. Don't really extend past this. I mean, there are certain times you can, but I recommend staying away from that. 1 to 3 trades per day. That should be your general good rule of thumb. Now, with that, your profit goal should be $100 a day. And you're going to look at me and you're going to say, Brett, why would I come into the market with $3,000 and look to make $100 per day? I mean, it's not a lot of money, right? How can I get by making $100 a day? Well, here's where the math comes in. If you trade for 2 months straight, so if you do what I said, right? If you do what I talked about, which was the 5-step system, right? Doing all this, you find a system that works, then you refine your system and test it out for 2 months. And let's just say you have a 70% win rate, which is a fair win rate. It's a pretty good win rate. And you have a 1-to-1 risk reward. I'm talking about 1-to-1 risk reward, meaning you could have for me, I have a 1-to-2 risk reward, most trades I take, meaning I usually stop out around minus 10% and my profit is usually around 15 to 20%. So my risk reward is much higher than that. But if you just had a 1-to-1 risk reward, meaning your average loss was 20% and your average gain was 20%, and you have a 70% win rate, after just about 2 months of time, your account will be at $9,500. And you say, okay, you're almost 10 grand. That's not that much. Well, things get interesting once you get past that 2-month mark. Now, once I was about 14 months into my trading and I just hit the stage of profitability and my account was around $10,000, I then developed cushion, right? So I started about 5K and I brought it to about 9.5K or 10K, whatever it was. At this point, this was my breakout stage. The reason why this was my breakout stage was because I just went through the grunt work of testing my strategy for 2 months. It's starting to work. It's starting to yield me some profits. And now I've developed an actual cushion, a $4,500 cushion that I can use. And now I'm a little more confident. I feel a little bit more nimble. So what I'm now going to do is I'm going to adjust my size, right? I'm going to adjust my size and increase my size a little bit. So I'm going to keep my same 10% of my account. But now I'm going to do 10% of my account off of $9,500, not 10% off $3,000. Because if I was looking for maybe $100 position size per day or profit goal per day, that's good for maybe the first 2 months, but then I want to scale up after that. So watch what happens if I go to ChatGPT for a second. I'm going to show you, I'm using AI here. This is very, very cool. I'm going to now change this. And I'm going to say, okay, well, if I have that same 70% win rate, but now I have a $9,500 account, right? Because now I just grew to $9,500, $9,500. How much will I make now in the next 2 months? And you're going to see how quickly things scale up, right? So now, if you use that same sort of win rate in 2 more months, you're going to be at $30,000. The idea is the hardest part of your trading is going to be this stage, is going to be building it from that 3K to 9K, right? 3K to 9K, because that's when you're developing your system, developing your strategy, building the cushion. Then once you get past that, you can start to put a little bit more, you can start to use 10% of that 9.5K and start to take more trades with a little bit more size. And then as things progress, you can do it again, right? So let's just say you have $30,000 in your account. Now you're going to see the power of compounding gains much more quickly, right? Now you're at 95K in 2 months. It's the hardest part where traders mostly fail, is getting to that second stage of being able to scale up. Most traders are not able to scale up because they don't spend the first 2 months trying to find a profitable system. What they will do is they'll spend the first 2 months, blowing their account, going too heavy, maybe putting 50% of their position in a trade and then continuously averaging down. And they don't give themselves the opportunity to make money in that first 2 months. The hardest part is the first 2 months. And I really mean that. For me, that was the hardest part for me. Once you get past that and you have that cushion, it becomes easier and easier to scale up. And that's why for me, I've gotten to the point now where I'm at that next stage of maybe starting to scale up, right? For me, my average size per trade is about 5 to 7K. Maybe soon it'll be more than that. And I'm going to continuously move my size up as I make more money and pull profits out. And you guys should be doing the same exact thing as you're growing your small account. I know $100 per day sounds minuscule when you're starting off, but after a month, after 2 months, you can size up more, and it's going to be $300 per day, $400 per day, then to $1,000 per day. My profit target per day when I was first starting was, I don't know, like $25, right? Because I had a very small account. Now it's closer to $1,000, right? So you're going to increase your profit target as you size up and build that cushion. Okay. Now, this is my final slide of today, and I want to just talk about some other advice. I don't know why I titled it advice. This is just trading advice, but the first thing is to limit yourself to 1 to 3 trades per day. Anything beyond this should be considered lotto size or high risk. For me, my first 1 to 3 trades are a little bit higher size, and anything after that, you either shouldn't be trading or it should be very, very small size. Never compromise your position size by going too heavy. Always define your risk. So if my risk, let's just say on SPY today, right? So if I were to go to the SPY trade on the 442 bounce, right? So this is what I did in SPY today, was I got in calls here at 442.40, and then I got in more at 442. And then at a certain point, right, I was in about a 4K position, right? I was in about a 4K position. At a certain point, I was red in this trade. It reclaimed my 442 level. It looked like it was going to go, but then it didn't, right? It didn't. And as a new trader, if I seen this red candle, I would have probably blown up and then added more contracts, right, very quickly, because I wanted to average down this trade. Well, I know I can't do that because my 4K was my intended size in the trade, and I can't add more size than what I intended to do, right? 4K is my intention. Never go beyond your intention. Always stick to what your account permits. So if you have a 3K account and you're looking for the 10% rule, which is the same one we just talked about, 10%, that means that your size is $300. If you are going above $300, you are disrespecting your position sizing strategy. You have to stick, you can't disrespect yourself. You have to stick within your size and never go beyond it. Now, the third thing that we have here is if you have red days, adjust your size, but don't be hesitant to take the trade. So today, I had a red day, right? So I go to my trades out. I don't have all my trades in here. I was actually basically break even on Wednesday, so I was full size today. And this is missing one trade. I actually was down about 850 today. But tomorrow on the 25th, I'm going to be smaller size. I'm going to be trading probably the 1/2 my normal size, but I'm not going to be hesitant to take the trades that fit within my strategy. The idea is you never want to be hesitant to take trades. You just want to adjust your size so you can give the trade time to work and not be jumping into position. So very important concept here. I know it sounds stupid to what I'm saying here, but just adjust your size. Don't be hesitant to follow your system. Confidence is developed through winning and building a cushion in your account. This seems very obvious, but the best way to build confidence when it comes to trading is by winning. You need to build that cushion. You need to size down your account. If you're a developing trader, go to 3-4K, right? Or 3 to 5K as your starting amount. And your whole goal is to just develop a cushion on that account. Come in every day and try to get a green calendar to bring your account value a little bit higher than it was the day prior. And as you do that and compound it, you're going to develop a cushion. And that cushion is going to be what allows you to feel more confident taking the setups you trade, and is going to allow you to ultimately be able to size up more when you have that cushion built up. Now, once you've seen 3+ months, 2 or 3+ months of profitability, you can scale up about 5 to 10% every 2 weeks. So that's what I did personally. Was every couple of weeks, I would add a little bit more size to my position, and this is what I did personally. Now, if I had a big red day, I would go back down to my initial size. And your whole goal as a small account is to not be a small account, but to do it organically, to do it by trading, not do it by adding capital to your account, right? You don't want to have to keep adding capital and keep refunding your account. You want to just grow it organically. And what I've seen personally, I've seen dozens of traders who are very successful in the chat, who are 6+ figure traders. Most of them have been trading for multiple years. Their first year is typically not a green year. I did not have a green year my first year at all, right? It was far from it. Most traders do not. So you want to be limiting your risk by trading a smaller size account, 3 to 4K, 3 to 5K. And then your whole goal is to just build a little bit on top of it, right? Every single day, try to build a little bit onto it. Then you can grow that account so quickly. I was not profitable for my first 8 months of trading. Then between month 8 to month 12, I doubled an account within a couple months. Then between month 12 to month 14, I doubled it again. And then from 14 to 16, I doubled it again. It becomes very easy to scale up. The hardest part is building that cushion. And that is where I think most traders fail at, is they stop at that point, right? They stop at the point of building cushion, because what they'll do is they just will overtrade. They'll take huge losses. They'll come in on daily today. They'll take the 442 bounce. They'll take 0 DTEs on it. They'll lose 50% because they're trading 0 DTEs. Then they'll take the 440 bounce because we're all in it. And then they'll lose on that too. And then they're down 50% in their account. You never want to be, it happens. It happened to me too. But you never want to be at the point where you are taking that much of a loss in your account. Because remember, we're longevity traders. We're traders that want to win in the long run. You don't want to just, get rich quick. It's a long game, and you guys have to treat it that way. 0 DTEs are a quick way to lose money very quickly. Stick to 1 DTEs as well. To the side note, 1 DTEs are very manageable. So for me, like when I was trading NVIDIA, I was trading 1 DTEs. I made off the opening bell pop NVIDIA, I made about 25%. Then SPY, the UDDs moved down 50%, but I wasn't in UDDs. I was in 1DD. So I only lost about 15 to 20%. That's manageable, right? I can stomach that loss and move on to the next trade without having confidence loss. It's very important that you guys do the same thing. Doesn't matter who you are. This is what worked well for me. And this is, what I've seen. I've seen probably 100, no, I would say maybe a little less, maybe about 50 traders go from, personally go from, break even slash red, maybe the red their first year to being multiple six-figure traders. This is what they all follow. This is what we all do. Trading is a very difficult thing to do, but it's incredibly lucrative. And a lot of it is just pure mentality. Okay. So what I want to do now, I know I've been just talking for the last 50 minutes. I want to answer some questions. I hope this is helpful so far, but what I want to do is I want to go over some questions you guys might have. So I'm going to spend the next about 9 minutes going over, what time is it? 7:51. I want to go over the next 9 minutes going over questions you guys have. That's where I wanted to stop. That's my stopping point. I've been ranting. Young, how often do you pay yourself and how much of the gains do you give? Transparency purposes, it depends on the month. For me this month, I've had a smaller month. August was a smaller month for me. So I'm not gonna be paying myself too much. I trade off of a 50K account usually. And what I do is I'll reset it. So I'll bring my account up from like 50K to like, let's say 75K. So let's say it's 25K. And what I'll do is I'll pay myself that 25K difference and then I'll go back to 50K, right? That's what I do is I literally would just set an account value that I like, I'm most comfortable with, which for me is about 50K. And then anything I see in that month is what I pay myself. So I pay myself every month. I do it every first of the month. And that's kind of what I've been doing for the last 2 years. Every first of the month I pay myself. But it's going to depend. Some months, may be small. Some months maybe I'll make it 10K. But some months I can make much more than that. It just depends on how I perform that month. Chris, how did you find the supply and demand on NVIDIA? What made you confident? Yeah, I can go over that. So NVIDIA was very simple. This was, it's tough. These earnings plays can be tough, right? They can sometimes be annoying, but for me, I saw on the hourly time frame that we had a very clear level here, right? The only level I had was at 480, right? 480 and then 484, right? Really 483.70, right? You can see here, that's the level I have, 483.70 to 480. So I was waiting for us to pull back into that demand for us to go long. Now, if we lost that demand, if we got below it, let's just say we got below it, the next demand I would have looked for was probably this 470 bounce. So the only bounce I'd be watching is either 470 bounce or the 484 to 480 bounce. So that was why I waited for that demand, because I just waited for us to pull back that level, right? And that was the whole trade. Got in calls, pushed to 490, sold. How do I know when to go heavy and not? Most times I'm half size in trades and I'm green, but when I go full size, it seems like I get killed. So what you want to do, first of all, journal, right? You want to journal the trades that you go full size in and journal the trades you don't go full size in. What I do typically is I will go full size I'll go half size on my starters, and then I'll add another 30 to 50% on my full size. So on SPY today, no, actually in NVIDIA today, let's go to NVIDIA. What I did was I added starters, which is 50% at 44, 45. Then I added more around 482. That was my full size. You're only going to get your full size if it pulls back to your full level, right? That's what I do is if it pulls back to my exact level, right? That's when I'm going to get full size. If it just bounces early, let's just say it came to 44 and it ripped off of it, well, I'm only going to have my half size. That's typically what just happens, right? Hopefully that helps. The idea is that you're usually 9 times out of 10, 8 times out of 10, you're only going to get your starter position, because technically speaking, your starter position should be where most of the trades just work out. It should just go from there. You shouldn't have to average down too much. How does trading 40 to 50 contracts make it harder to execute in and out trades at once? Should there be a different TP strategy? Amir, there is nothing different than, in my opinion, my honest belief. I trade about 40 to 50 contracts. There's nothing different between how I traded 4 to 5 contracts versus how I trade 40 to 50 contracts. I do the same thing. What I do is I will take safe sells or safe profit at 10 to 15%. So if I'm in 5 contracts, I'll take 2 or 3 off. Then I'll take more profit at 20% and sell the rest. If I'm trading 40 to 50 contracts, I'm going to sell 25 contracts at a safe sell, which would be like 15%. Then I'll take more at my final take profit. So if you see here, I'm going to go to intraday analysis for a second. You'll see I was watching the SPY here, right? I got in the 435 calls, right? And then I sold some at 11%. So let's just say if I was in 50 contracts, I would be selling 25 here. And then my stops would be moved to break even now. So I can't go red this trade anymore. Then I'm going to sell the other 25 here, right? And if I'm in 5 contracts, if I took 5 contracts, well, I would buy 5. Then I'll sell 3 here and then 2 over here, right? The same thing. My scaling in doesn't really change. It's the same exact thing. You just add a 0 to it, basically. If you say on the break, can I take the charge and put market buy as soon as the market open, or do I wait for the break and hold? You have to wait for the break and hold, Kasten. So if you are taking like NVIDIA, so I was also watching NVIDIA above 512 today. So if you're watching NVIDIA above 512, you have to wait for it to break above 512 first. You have to wait for it to break, show you strength above that key tactical level, then you can get in the retest for a call entry for a move higher back to 520. So for break and holds, you have to wait for it to break above or hold above, then get in the retest for a move higher, right? Just like Google, right? Why did Google work for the day? Well, Google was just a break and retest above that 132. Right? You can see here, we broke above, right? We broke above here, then we retested over here, and we got that big upside move over there, right? The idea is that with break and retest, break and holds, you're waiting for it to clear above your tactical level first. Can you show us how to mark up the key levels? And is there a system to marking these levels? I'm struggling with this. Nicole, that would take me like about 45 minutes to do. So what I'm going to do is we'll do another lesson on how I find key levels. Do you guys want that? Would that be something you guys want to do? Is a lesson on how to find key levels? Okay. Yeah, we can do that. Maybe next weekend, maybe next Friday, we'll do another lesson. So next Friday, we can plan something for next Friday where we go over how to find key levels. Google with an L has voting rights, and Google without the L has no voting rights. Yeah, next Friday we can do key levels next Friday. To grow a small account, should I stick to profit targets or take profits as soon as I get 20%? I'm usually trading one contract at a time, so I can't scale out. In my opinion, you have to be using profit targets. So also my belief too, you want my honest opinion? If you're just trading one contract and you're trying to grow your account just trading one contract, it's going to be very difficult. In my opinion, you have to be at least 1 to 3 contracts, at least 2 to 3 contracts. The reason why I say that is because let's just say, right, you're in Google on this break and retest. If you're in one contract, right, you got your calls, whatever here. Well, technically speaking, you should be selling at 132.50 because that's the previous high of day, right? So you should be taking profit at 132.50. So you're getting calls, you take profit, some profit over here. Now, if you're in just one contract, that means you're taking profit at 10%, which kind of sucks, right? It kind of sucky. And your max loss in this is probably going to be 15%. So that means that you're going to be, this is a negative risk reward. You're going to have more risk than you reward here. But let's just say you had 3 contracts now. So if you had 3 contracts, you would sell 1 contract over here at that 132.50, and you'd sell 2 more at maybe 133. And then maybe if you had another contract, you sell more at 134, right? If you have more contracts, it gives you the ability to scale out. So what I would say, even if you have a small account, even if you're trading with 10% of your account, and you're using a 3K position size, a 3K account, that's $300. Well, you can easily find contracts that are $100 a pop and take 3 of them at a time. I think you can do that. I think you can, right? So you can find, get 3 contracts in each trade, and then it'll give you the ability to scale out so that you're not always taking profit 10%, not always taking profit 15%. It gives you the ability to hold your trades a bit more. Like if you were in SPY puts today, right? Let's just say you were in SPY puts. Aristotle took SPY puts, right? So I think he was in SPY puts over here at 445. So if you took SPY puts at 445, and let's just say, well, you got in SPY puts at 445, well, you have to take profit at low of day, right? 443.50, you have to be taking profit there. If you're in one contract, it means you're buying one here and you're selling one over here. Well, okay, cool. But let's just say if you bought three over here that were a little bit cheaper contracts, now want three cheaper contracts, then what you do is you sell two over here, and then you can use the 5 EMA to guide your trade all the way down until it breaks above the 5 EMA, in which case you then sell your last contract. So if you turn on the 5 EMA, you could have just ran SPY down all the way till maybe over here, 442, right? And you would have sold the rest of your contracts there. The idea is that if you have more contracts, it gives you the ability to properly manage your positions. I think, in my opinion, you need at least 2 or 3 contracts. How do you mean less? Do you mean less than the money? Yeah, exactly, Luis. So if I'm watching like the 442 calls on SPY, maybe take the 443 calls, right? Maybe go a little bit out of the money to allow yourself to take multiple contracts. Don't go too far out of the money. Just go a little bit out of the money, so it's a little bit cheaper. Ken Palmer, why use the 5 EMA instead of the 8 EMA? You could use either one, Ken, but I like the 5 EMA a bit better. How did you rebuild confidence after blowing 2 accounts? Was it just starting small? Very important. And you asked a very important question. How do you rebuild confidence after blowing 2 accounts? Was it just starting small and being consistent? It is exactly this. It is resetting my account. So I was, at that point, I had about 5K account. I took $2,000 out of my account. I put it into a bunch of long-term investments. Then I held 3K, and that was my benchmark. So 3K, my whole goal is to make it more money. And what I did was I literally followed the 5-step system we talked about before, was trying to find a system and then only trading that system for 2 months. And just taking 1 to 3 trades per day, being consistent, right? Trying to grow the account every single day, and then building a little bit of cushion. Now, once I built that cushion, that is where I then developed confidence. But it took a long time. Like it took, the first week, I think the first week I was break even. The second week, I think it was also break even. The third week, I think I was just barely green. Then by the 4th and 5th and 6th week of the challenge, I then started to build a little bit of momentum while I was trading, right? The whole idea is you want to just build a little bit of momentum, capitalize on that. And then you're going to have cushion to take more trades and take more setups. But the hardest thing is building that cushion. If I'm primarily a swing trader, what would be a reasonable time frame for me to go from 5K to 10K? You would take a lot less trades, and it would probably take you about 6 months, right? 5 to 6 months. It would take about one trade per week typically. I would say probably about maybe 3 to 6 months. Did you paper trade at any point? I did paper trade. I paper traded for when I was. This is also you can do this as well. Is you can also paper trade, right? If you guys wanted to, if you don't want to, you don't want to go crazy and let's just say you don't want to use 3K. You don't want to play with it. You use a Thinkorswim paper trading account, get the one that's live, and you can start studying a strategy, right? Doing the same. Remember the same we just talked about, the 5 things we talked about. You could do this all in a paper trading account for your first 2 months or first week or so, right? First couple of weeks, use the paper trading account. It's a great tool to use. I personally did this, right? I used it for a little bit. Didn't use it for very long, but you can totally use a paper trading account. It's a good way to learn and figure out a system while you're still trying to find that. What EMAs do I recommend using? I use the 5, the 8, the 13, and the 34 EMA the most. Why wait for a bouncy reject when there was a bigger move trading with a trend today? It's a good question. Let me show you in SPY today. Well, let's show you something. So if you're to go to that 15-minute time frame on SPY usually, right, when you see big moves down, you typically see reversals, right? Big move down, reversal, big move down, reversal, big move down, reversal, off key demand, right? Big move up, bounce. This was a trade we actually took together. If you guys remember from a couple of weeks ago, we took this trade right here. I remember this trade. It was a 452 bounce on SPY. And many people probably would look at this trade and say, Brett, this was a great trade, right? That was a great trade. There was a 452 bounce. You got the low of day on that trade, or it was almost low of day. It's a good trade. But if you go to today's session, what happened today was that we just didn't respect any demand, right? If you go to the 5 minute time frame and replay the same feature, look at this chart for a second. To me, this is a bullish chart. Why is it a bullish chart? Because we are just approaching demand at 442. This is a trade I would take 10 times over. 442 bounce, right? Now, if we lose 442, next key level is 440. Now, when we lose 440, then you can look for downside for a big move down. And that's where I think you could have shifted and gone short, right? But the idea is that it's always counter trend. It's not counter trend, right? When you're taking the bounce, then all of a sudden when it doesn't work, then it's counter trend. So this to me is bullish, right? This to me is bullish in every sense. If you tried to go short at demand, or you could have said, okay, well, this is a downtrend. You try to go short at demand, you would have lost. Try to go short at demand, you would have lost. Try to go short at demand, you would have lost. Today was the first day in 2 weeks where if you tried to go short at demand, you won, right? It's an anomaly, right? Today was a statistical anomaly where we just broke through demand and we didn't see any upside. Most days we would have seen a little bit of upside off this demand, right? Then a move higher, a little bit of upside off this demand, then move higher, right? Then maybe lower, right? But the idea is that we saw none of that today. Trading with the trend is very easy in hindsight, right? Looking at this chart, it was very easy to buy and hold puts. But when it comes to actual entries, in my opinion, the only entry I see here in SPY was maybe below 440. Because once we lost 440, that is where you could have went short and saw some downside. I personally didn't trade this though. I just took 442 and 440, and they're trades I would have personally taken again because most days they would have worked. Yeah, nothing's 100%. Simple as that, right? No strategy is going to be 100%. You look at the chart today. Today was just, all right, look at today's price action. If I were to remove all of my indicators, look at the sheer drop we saw today with zero relief compared to every other day where we see typically reactions off key level. Look at this, right? Look at how you can see SPY trades with key levels, right? You can see once we get above the level, right? 450, 452, right? Break, demand bounce here, move higher, right? Whereas today we just straight up melted, right? Today was one of these days where we just had a melting day. The reason why was because of NVIDIA, right? NVIDIA was a name that propped up the market. Everything was super strong because of AI. They killed it. NVIDIA being the forefront of AI, it basically held the market up. Then all of a sudden, NVIDIA started dropping. We lost our demand. Then everything just flushed because people got scared, right? Microsoft dumped, almost 20 points, right? 15 points. Apple dumped, $5. Google dumped from 134.50 down to 129. A lot of names just aggressively dump today. It's not always going to happen, but sometimes it will. Yeah, I mean, that's what happened. How do you move your stop loss to break even on Thinkorswim after you profit a little bit? You watch your trade. So let's just say I'm in SPY, right? Let's just say I got in SPY and I was in SPY puts, right? Let's just say I waited for SPY to lose this 440, right? I got in the break. I waited for us to push a little higher, 441. I got the short here at 441. Now, if I'm taking profit here at 440, taking my 10% profit, all I'm going to do is watch my chart, watch my active trader on Thinkorswim. And if we pop back into my entry point, break above it just a little bit, I'm going to stop out the rest of my contracts. So you do it by watching the chart and watching your profit and loss on your active trader or your brokerage. Why do you make the rectangle that size? What do you mean? I'm not sure. My supply and demand, it's based upon the levels. So my rectangles are based upon my charts, right? The key level. So on SPY, my level, my rectangle here is 436.80 down to like 436.30. The reason why is because that's the supply, right? It's always going to be, the size is going to vary depending on how large that supply is or demand is. I put trend lines in the current. I put trend lines in the zone of the current candles. Will this be posted? Yeah, it will be posted. This will be posted for you guys. I need a strategy. Like, how do you find one? Like Aristotle 940 said, wait for the breakout, either calls or puts, but I need another. What do you recommend? The simple and easiest trading strategy, I think that is one of the easiest systems to learn is the break and retest strategy. Trade it. That's what I would stick to. You want to find a system that works really well, that you can trade every single day in and out, trade the break and retest strategy. Right. If you want to test other strategies, go for the bounce reject strategy. Both are very good, but I would say break and retest is one of the easiest systems to learn. Wait for it to break, wait for it to retest your level, and get in at that retest level. How do you know where to find your stop loss? Like Friday, you guys say 50%, I think, which is way different than the 15 to 20% always here. KR, watch the video we just did last week or 2 weeks ago on break and retests. I think it'll help you a lot, right? You can be very profitable trading break and retests, but it's dependent on how you trade them. Where can I find that video? I can send it if you tag me in the chat either tonight or tomorrow. I'll send you the video. How do you know if you're putting your lines in the right place when charting what you're looking for? Mitzan, we'll do a level system class. If you guys want, we'll do levels. We'll talk about it. Let me float the idea. I think you guys want to do it, so I think I'm going to do it. If enough people vote for it when I post it in the chat, then we'll do it. I think it might be next week. We'll do it on the level system. Okay. How do you know what makes whole numbers? My key levels are typically whole numbers, usually whole numbers. Okay. Brett, I like when you, Felony, Mike, and Rav join live. Yeah, Luis. Well, I think I'll be on to voice tomorrow, so we'll all be on. I think me, Mike, Rav, and Felony will be on voice tomorrow. Yeah, I think we'll all be on tomorrow, so it'll be good. Hopefully, we get some nice action tomorrow. I'd say it was a tough day, but we'll move on. We'll see what we can get tomorrow. When you guys are trading, you're calling out percentages. Where do you get this from? So basically, on my Thinkorswim, let me see if I can share my Thinkorswim. My brokerage is closed today, but if I could show you it, basically, I have a video that I use from my active trader. So if you use Thinkorswim, I'll show it to you. Who asked me that? The person that asked me, Kmart, tag me in the chat and I can show you what I do on Thinkorswim. In the stocks only tab. If you tag me in the chat in a couple hours, I'll send you a video on what I do. How does Powell impact? He impacts everything. So we'll have to see. It sucks when Powell speaks because it can impact the market a lot, but we'll see what we can do. Well, how'd you guys like today's lesson? Was it helpful? You put a me in the chat if you thought it was helpful, or what do you guys think? Overall helpful? Awesome. Beautiful. Very nice. I know we were talking for a long time, but I do these classes. I talk to you guys as if I was talking to myself when I was a new trader. Look, I don't know everything. I'm still a developing trader myself. I've learned a lot over the past couple of years, and I don't think I think after seeing a lot of profitable traders, go from not being profitable to profitable, I do these lessons as if I was talking to myself like 4 or 5 years ago. So I hope it's helpful. Was it recorded? Yeah, it was recorded. So this is all recorded to be able to access this afterwards. Emmanuel, it took me about 3 months it took me about 3 months to rebuild my account. So just to draw it out here, I turned 5K into nil. Then I took 5K into nil. Then I took 3K, and in about 3 months, I turned it to about 6K. Then in a couple months, I turned that to about 9K. So it's all in all, it took me about maybe 3 to 6 months to really get back that 10K loss. after I had become profitable. It took me some time. Now it could take you less time because you have different traders. I've personally seen traders in the chat, right, who have been red the first 3 years of trading. They joined Honey Drip. They were in other chats before. And then in about 3 months, they have rebuilt all the losses that they took in the last 3 years. I've personally seen it. There are a lot of people in the chat who don't use Honey Drip for voice or don't use Honey Drip for signals. They just are there for the community portion. There are a lot of people in the chat who are even more profitable than some of the admins. And for them, it could happen in a matter of months. Sometimes it could take years. It just depends who you are. It could take very little. It could take a little bit longer. Burmy Trader, I do not have a mentorship right now. I don't have any mentorship. I don't really offer anything right now. Best thing you're going to get is no mentorship. Is just these lessons are good. These lessons are I think are really helpful. What point does it become difficult to get filled on entries and exits? For me, I have not gone to that point yet. I speak to one trader who is he's almost, I think he's definitely a 7-figure trader. And I think once you get to the point where you're at like 7 figures, 8 figures, that's where it becomes a little bit difficult because you have slippage. If you start buying 100 contracts at a time, you get slippage. So they'll try to screw up your order. Like if you try buying SPY like 100 contracts or 200 contracts, you'll probably get filled. But if you try buying NVIDIA 100 contracts or 200 contracts, you're not going to get filled in all of them. What's going to happen is like, it's a whole different topic, but the slippage, it's called slippage. Basically, they'll fill you in some of them, and then they'll try to get you to pay more for those other contracts because they're trying to F up your order. But it's easier to trade under 100 contracts. You don't really have slippage. I use the break and retest in the 5-minute time frame. That's personally what I do. Always 5-minute time frame for me. Would you suggest for a $500 account? Tough. I would say it's tough, but you can do it. You $500 account. Well, actually, we have a journal for this. $500 account. You would want to size 10% each trade, which is $50 per trade. Your profit target would be $18 per day. It sounds like very little, and it is very little, but that's how I would do it. Then once you grow it to $2,000, you then will make more money. You'll be able to scale up, but you have to start. In my opinion, the 10% rule is what I do with everything. Even if it's a $100 account, I would use a 10% rule. Sometimes when I take trades, I start off down 1%. Why is that? It's because you're getting filled at the ask. When you get filled at what sellers are willing to sell for, and you can only sell for what buyers are willing to buy for, you're going to be down by the difference or the spread. So you're going to be naturally down always about 1% or 0.5% when you get filled at the ask. So if you want to get filled, being green or being at 0%, you should try to get filled closer to the bid price. If you get filled close to the bid, you're going to be able to start off green. Did you have a mentor? I did not have a mentor. No mentor. I did not have a mentor. I just looked at what other people were doing and figured out what was working for them and then tried to work it out with them. Right. I didn't really do much other than that. And in reality, you don't have to. I'm not going to tell you have to take a course, or you really don't have to. You can do it yourself. Follow YouTube, come to these sessions. I can almost promise you watch the last 10 classes we've done in Honey Drip University, last 10 classes we've done, you have a class right there. That's almost a whole class. Yeah. No mentor, no crazy class. You can use classes are great though. I don't want to talk bad about the classes can be incredible. That's everything you need in one thing. Like the mentorship that Aristotle offers, it's great, 100%. I would advocate for it. You can become a killer trader. But if you want to save money, you can also do it by coming to the classes we do here in Honey Drip University. Yeah. Always, well, never will BS you guys. Mentorship you can learn a lot from. Trust me, you can learn a lot from, but it can be expensive, especially if you're trying to grow a small account. It's just like this. Like if you wanted to become a real estate agent and become a very successful real estate agent, you have two options. You can go and try to learn yourself and watch YouTube videos, or you can pay someone to help you and make that process faster. Paying someone to help you, like a mentee or mentor to expedite that process, it probably will work and it probably will get you there faster. But if you don't want to risk too much and you want to save your money, you can do it without paying a mentee or a mentor. You can do it without it. You can. Personally, I've offered mentorship programs before. I've done it before, and I always do give a lot into it. And I teach a lot and do as much as I can, but you can also do it without it. And I don't want to sit here and tell you that you need a mentor, because you don't. You can do it without it. How is trading SPY different from QQQ? For me, I think it's not. It should never be any different. Will win. SPY and QQQ should be very similar to trade. Any ticker should be the same. Should be similar. If you're trading supply and demand, most tickers should be very similar to trade. But for me, I have like a 80 to 90% win rate on SPY, and in QQQ, I have like a 50 to 60% win rate in QQQ. Don't know why. I just think I have a better read on SPY. QQQ is just a little bit tough to trade sometimes. Yeah, mentorships can be mentorships. It's like a fast class to getting all the content you need. It can be extremely helpful, right? It can be. It's basically giving you everything you need. Everything you need. If you're not doing a mentorship, you can still do it. It's just gonna be a little bit harder. %10 sounds crazy, but I have to stop blowing my account. And Brett, you talk about 10% per trade or 10% at a time, because this is where I always 10% position size per trade. That's what I typically do. Saint, message me on Discord and I can help you out. Yes, this is in the trading misc tab. So if you go to trading misc here, if you go to trading misc here, you can see that. Scroll up a little bit. What the heck is it? It's here. But this is the link you want to see. Yeah. Well, all right, guys, it's already 8:22. I can't believe it's been an hour and 20 minutes. I thought we would just do a 30-minute session, but